What's up? How we doing? Hold on, let me get everything set up real quick. What up? Let me tell you, I just got this new computer chair and it is so comfy. It's got like a back massager. This thing is advanced. Anyways, I'm gonna give everybody a couple minutes real quick to join up in here. How's everybody's Saturday going though? Actually, how was everybody's trading week? You guys make money, lose money, take no trades? Oh, you can hear it buzzing. Hold up. Oh, it's picking up on the mic. Never mind. Just won't buzz my back then. Oh well. Cool. What's up, everybody? So, yeah, like I said, we're gonna do a beginner options trading course. If you are somebody who just started trading, haven't started trading yet, you know, whatever the reason is, this is gonna be for you. We're gonna be talking a lot of beginner stuff and a little bit about my trading strategy. But hold on, still getting things set up. Boom, boom. Q. Hey, losing's part of trading though. Always remember that. I was talking to the people in my book Discord about that yesterday. You're gonna have red days. I had a red day on Tuesday, crushed it Wednesday, Thursday, and made money yesterday. So I can't complain. Just traded the Qs this week, netted 1,700. Hey, I love to hear it, Josh. Good job. Cool. So yeah, let's just start doing this now. Give everybody 5 minutes to join in. So if you guys could make sure to click the like button, it would be greatly appreciated. It's gonna help with the YouTube algo, and like I said, this is all going to be free information. So yeah, all you guys got to do is your part. Click the like button if you guys feel like donating or whatever it is. Donations are on in this live stream. But yeah, where can you find an actual mentor? Right here. I mentor people all the time. Let's see. Lost about 100 on Wednesday. Yeah, I mean, as long as your green days are bigger than your red days, you are fine. But yeah, so let's hop into this. So again, I'm just gonna start very basic. What is options trading? So basically options, right? Because I don't trade equity, or it's very rare that I trade equity. Basically with options, what you're doing is, if you break down the basics of what options are, you have calls and you have puts. So we can make money both ways. A call is basically you're saying that the stock is going to go up in price. So if I'm bullish on Roku, which I am, and you guys are going to see that in the weekly watch list tomorrow, say I want to look for calls going, you know, later into the year. Yes, this will be recorded as well. But say I want to look at some calls because I'm bullish on Roku. Well, what I can do is, in the options world, we have expiration dates. So we are saying, okay, this stock is going to be at this price by this date. So we can also do it to the downside with the puts, but let's just stick to the calls for now. So if you are bullish because through your technical analysis, you believe that Roku is going to go up in price, you can go to the option chain and you can look at the calls. Now, when it comes to trading, going back to the expiration date, you have to have a very good understanding of you know, where is the stock price going to be by September 16th. Let's just say we were looking to swing all the way out there. So now, after you determine your expiration date, again, through your technicals, thinking how long is it going to take to actually reach this price target, and the way that you're going to determine your expiration date is, you know, how far are you looking to take this thing? So if Roku right now is at $94 and you think that Roku, or you say you want to take Roku to 95 when it's at 94.41, you don't need to go 69 days out for an expiration. You could probably look for something that's like 2 weeks out, maybe 3. So it all depends, where are you trying to take this thing. If I'm looking to take Roku up to 115, which is going to be like $20, and considering it's only at $94, I'm going to be basically looking for a 20% move in Roku's stock price. So I want something a little further, and September 16th would line up perfectly with that. So you need to look at the technicals And after looking at the technicals, that will determine, okay, where's my expiration date going to be? Now, that would be for swing trading. If you're day trading, however, you're always going to be doing the very first expiration date. So I always get that question. If it's a Wednesday, I'm still doing the very first expiration date. If it's a Thursday, same expiration date that week. Friday, same thing. It expires that day. So yeah, swing trading, it depends how far out or actually where's the price target. And day trading, always same week. Now, like I said, we have the calls. If you're bullish in the overall stock, what you're going to be looking for is calls. If you're bearish, like SPY, when it sold off significantly, right? We can buy puts and profit off of SPY dropping in price. So yeah, if you're going through your technicals and you're like, wow, SPY looks really weak. If it breaks below this level and it breaks below that level, and you start taking your technicals, okay, let's see where this thing can go to, just using basic Fibonacci. And again, I talk about how to use Fibonacci in my book. What are you aiming for? 396 and then 378. So we can profit off of SPY dropping in price. So that's the difference between calls and puts. You want to buy calls when you think the stock's going to go up, and you want to buy puts when you think the stock is going to go down. Now, also, you know, what's the difference between equity and options, right? So in the options world, let's just go to, actually, let's look at SPY. If we were, say the market was open today and we were day trading, basically what these options represent is 100 shares of the underlying stock. So if we're looking at SPY and we say, okay, this thing could go to 390, that's our strike price, 390. So we would be willing to pay $140 to get into this trade. And I'm going to answer all your questions here in a little bit once I just start getting through some stuff. But what we could do is we're looking at the 390s. We think SPY is bullish. Okay, let's look at the $390 call. Let's get into this trade. To get into this trade, to buy one single contract is going to use you're going to be buying it for $141. Now, this is where the Greeks come into play, because the Greeks are going to be very, very important when you're day trading. And I actually have a little hack when it comes to swing trading that we'll talk about. But if we're looking at SPY 390, we buy this for 141 bucks. The delta is telling us how much money we are going to make based off of a $1 move in the underlying asset. So if SPY right now is at, let's just say $389, and SPY goes up to 390, well, we only put 140 bucks into this thing and we made $40 off of it. So what is that when you're talking returns? Like a 30% return, almost a 30% return. And you know, they're super, super cheap. You could buy 3, 4, 5, 6, 7, 8, 9, 10, however many you want. Obviously you want to use risk management, but $40 off of a $1 move when we're buying this for 140 bucks, that is fantastic returns. Now, if you're somebody who trades equity, you're going to have a much bigger position to just make $40. In order to make $40 off a SPY, if it made a $1 move, you need to buy 40 shares. So what is that? Hold on. Let me get the calculator up. If you were to buy 40 shares of SPY at $388.67, you're going to have to put in $15,546.80 just to make 40 bucks off of a $1 move. That risk to reward to me makes 0 cents. We're talking like, I don't even know if that's a percent. Yeah, that's got to be under a percent, like 0.5% return. But again, if we bought this for 140 and we get a $40 return off of a $1 move, we're talking almost a 30% return, which is amazing. So that's why I prefer to trade options. If you're a small trading account, options are going to be the way to go. Now, on the flip side, of course, you can also lose a lot of money when it comes to options if you don't know what you're doing, because if SPY goes against you $1, guess what? You're going to lose $40 multiplied by however many contracts that you actually have. Now, if you were to go the equity route and you did put whatever it was, the large amount of money into the SPY and it went against you $1, well, you're only going to lose $1 per share. So yeah, you can make a lot more money when it comes to options, but you can also lose a lot of money if you're not using proper risk management. And then hold on, let me answer some questions real quick. Let's see, will this be posted later? Yes. Also for single option contracts, the longer the expiration date. Yep. Yeah, the theta, the closer the expiration, the higher it will be. Why would you sell a put versus buying a call? What do you mean selling a put? You mean buying a put? You will buy a put if you think the stock price is going to go down. Buy a call if you think it's going to go up. Let's see. Yes, because David, the further out you go, the more expensive the contracts become. So if we're looking, because if we're planning to sell this the same day, why do I want to go, 11 days out on a contract and spend $540 for the same contract that I could buy for $140 here? I could buy 4 or 5 of these for one of these and make a lot more money, because if we go back to the delta, a $47 delta, well, if we put $540 into this thing, we're going to make 40 bucks if it moves, or $47 if it moves $1. But if we buy 4 or 5 of these, let's just say we buy 5, we're going to make $200 off of a $1 move. That makes sense? So that's why I always do the first dated expiration when it comes to swing trading, whatever that very top one is. I don't care what day of the week it is. It could be a Friday. I'm gonna still use those. But yeah, so that's your delta. Just remember, stock goes up $1, you're gonna make the delta. Stock goes down $1, you're gonna lose the delta. That's typically how it goes. Now, the next thing in the option chain is going to be the gamma. The gamma is going to be super, super important, because basically what the gamma is telling us, and another reason why I prefer closer dated expirations, is because the gamma gets added on top of the delta for every $1 move that the stock makes. So we're going to stick with this $390 call. So let's pull up the calculator again. We buy this contract for 140 bucks. SPY, let's just say it's at 389. It goes up $1 to 390. We're gonna make $40 on our contract, which means our contract is now going to be worth $180. Now the gamma is going to get added on top of that delta, and our delta will then become 48. You can see how it's already doing it in the option chain. So 848, the next one is 755, 762, 668. You can see how they're already being added up in the deltas. So this 40 will become 48, and then this will become 39. So the next dollar that SPY makes, or the next dollar move it makes in your direction, we're gonna make $48 based off of that move. So already off of a $2 move, we made $88 in profit from a $140 investment, which is 62% return, which is insane. So the gamma is going to continue to get added on top of your delta as this thing continues to move in your favor, and then eventually it's just going to max out at 99. Looks like SPY isn't at it. But yeah, the highest it can go is going to be $99 for your delta. Now the gamma is always going to be highest around the money. So if we're going back up to here, we can see how the gamma is 8.7 for the ones that are at the money. But as you go further away from the money, it begins to get smaller. So you'll start to see 4, 2, and then 1, and then eventually 0. So that's what your gamma is. Gamma gets added on top of your delta for every $1 move that the stock makes in your favor, and then vice versa. So if SPY right now is at 389 and this delta is at 40, well, guess what? If SPY drops down to 388, this delta is going to become 32. You can see that right here. This has a $7 gamma. SPY drops $1 against your position. Delta becomes 25. So it goes both ways. And again, if you guys could, make sure to click that like button. It would be greatly appreciated. Just because we're doing a free webinar on a Saturday. Helps a lot with the channel. Make sure to click the subscribe button as well if you have not. I'm super close to 25K, so y'all would mean the absolute world to me. Or it would mean the absolute world to me if you guys did click the subscribe as well. So now, yeah, Delta and Gamma, they sound amazing, right? You can make a lot of money if you pick the right direction in the stock. But on the downside, you also have this Theta. Now, when you're swing trading, the reason that I swing trade further dated expirations, and we'll talk about the swing trading here in a hot minute, but the Theta is basically telling you how much your contract is going to depreciate in value every single day that you hold the position. So if we're looking at SPY and we're going to be trading this and it expires in 2 days, let's say it's Monday, market opens Monday, we buy this thing for $140, and let's just say that SPY does not move a single penny, and by the end of the day our contract is still $140, and we're like, all right, we're gonna hold this overnight. Well, if we're looking at our Theta, we have a $51 Theta, meaning tomorrow if we swing this overnight and SPY opens up at the same exact price, does not move at all, our contract is now going to be worth $89 or $90. So we are automatically going to lose $51 on this contract, which is a ridiculous amount considering it's only $140. That ate up like almost 30% or a little over 30% of the actual contract. So you're going to be down 30% right as the market opens tomorrow. Say you want to hold this thing again overnight. Well, the Theta is going to get higher because now expiration is 1 day away. So by the time the market opens tomorrow, you're going to be screwed. Yep, every single contract is a $51 loss. If you buy 10 contracts, you're automatically going to lose $510 tomorrow. That's not even including if the stock goes against you. So yeah, when I swing trade, a little hack, because actually we'll wait for that. We'll come back to that. But yeah, Theta, you gotta know about that. If you're gonna be swinging something, you could even look August 19th for SPY. I mean, yeah, these contracts are dumb expensive. I don't swing trade stuff typically that are gonna cost this much, but you're gonna be losing $15 a day. So if SPY just stayed flat for 3 days in a row, didn't move, you're gonna lose 45 bucks. The closer that expiration gets, Theta is gonna get higher. You can see how, you know, we have 50s, 40s, we go a little further out, we start to get to 20, and then eventually like 15s, almost 10s. So the further away, the higher the Theta, or the lower the Theta, the closer, the higher the Theta. And then finally you have your Vega. So the Vega has to do with implied volatility, and the reason why I trade squeeze setups, this is going to make sense, especially if you did end up purchasing my trading ebook. If you guys have not, I'm just going to drop that in the chat real quick. There we go. Of course, everybody, you're welcome, you're welcome. But yeah, so I talk about this in my book because Vega is tied to the implied volatility. Implied volatility is basically the market maker's expectations of the underlying asset. So right now we're in a very volatile market, meaning the implied volatility is really, really high. So as a result, the Vega basically is telling us how much our contracts are going to appreciate or depreciate in value for every 1%, for every 1% that the implied volatility increases or decreases. So let's just say, actually, hold on, let me get the actual implied volatility up here. Implied volatility, boom. Okay, so if we're looking at SPY, and let's just say we're swinging for July 15th. This implied volatility is really high for SPY. Like it used to be only like 13%, which is crazy. Yeah, the Ttm Squeeze. Remember I talk about it all the time. We'll come back to it. We'll talk about it a little bit. Again, I also talk about it in the book. But with the implied volatility on the contracts, they're at 23% right now. And we have a Vega of $20. Let's just say the market makers, there's really high implied volatility because we're getting into earnings season. I think we have Apple and a few other big names coming up. Let's say it becomes very, very volatile, and they're like, okay, there's higher expectations going into the future. Implied volatility is going to go up. Let's just say it goes up 5% to 28%. While 20 times 5 is $100, meaning just based off of the implied volatility increase, these contracts are now going to be worth $463. And the stock SPY doesn't even have to move for that. So yeah, if the implied volatility itself just increases, you're going to make the Vega. Could go up 10%, which that's not normal for SPY. But if you're trading like a really volatile name like GameStop or AMC, those implied volatilities jump around all the time. So if this thing went up 10% just out of the blue, you're going to make $200 on your contract, 50% almost, just off of implied volatility. Stock doesn't even have to move. And the IV could, potentially give you a higher or profit you, or if the IV drops, it's going to screw you. So that's pretty much what the Vega is. It's how much your contract is going to appreciate or depreciate for every 1 percentage point move in the implied volatility. So does Apple report this week? No, that's in 2 weeks. Hold on, let me pull up an earnings calendar. Earnings calendar. Let's see what we got. Most anticipated earnings. That's what we want. I don't know if they posted it yet. They did. Okay. Any big names? We got the banks this week. Pepsi. Let's look at Pepsi. Yes, they do report this week. So, no. I'm trying to think. You can really notice it in the tech names. Wait till Apple and Microsoft come around, their earnings week. You're going to notice that the premiums on the contracts are a lot more expensive because of the implied volatility. Implied volatility could spike for many reasons, one of them being earnings, news, huge breakouts. Just we really don't know when it's going to spike or drop, but it's worth noting how high the IV is, because you're going to know, okay, is the contracts dumb expensive more than they should be, or are they really cheap because of the implied volatility. Now, the reason why I trade squeeze setups specifically is because, let's see if I can hit something real quick. Let's see, something that's been squeezing longer. That's one squeeze. Are all these single squeezes? Okay, so basically with a squeeze, right? And we might lap around back to this. But with a squeeze, basically what's happening is the stock price is not moving. You see this consolidation? So when a stock price is consolidated, we are going to begin to see red dots on the Ttm Squeeze. Now from there, what's going to happen is implied volatility is going to drop because it doesn't have high expectations. The stock isn't moving, meaning the implied volatility is going to drop on the contracts. The Vega is going to get taken off because IV is very low because we're squeezing. And then once that squeeze finally releases, the IV is going to jump. Therefore, if you are in that trade, you are going to make money off of the implied volatility from the Vega. You're going to make money off of the Delta, and you're going to make money off of the Gamma. So if you piece that together with stupid cheap contracts because it's squeezing, plus Vega, plus Delta, plus Gamma, you're going to have yourself a beautiful trade. Same thing intraday. If you find stocks that are squeezing intraday 5 minute, 10 minute, and they kind of just sit there for a while, watch the implied volatility. It's going to be lower. If you want to pull it up when it finally releases and fires in your direction, you're going to notice that it jumps. Let's see. Thank you for the subscribe. I greatly appreciate it. What moves more, $500 contract in the money or 10? You're going to make more money off of the out of the money contracts. I would say it's very rare that I do in the money contracts. It depends if that's the only place where liquidity is. So, but yeah, that is the basics of Delta, Gamma, Theta, Vega, implied volatility. Obviously, you have your premium that you have to pay. So the buyers are at the ask, the sellers are at the bid. And really, I get asked this question all the time. How do you find liquidity? Really, the easiest way to find liquidity when I'm swing trading, I swing trade these gray expirations. These are the monthly expirations because that's where the most liquidity is, because that's where the swing traders are. So these monthly expirations are the third Friday of every single month. So guess what? July 15th is the third Friday of this month. Go to August 19th, August 19th. This is where your liquidity is going to be. We look at CME for a weekly contract. Nobody is in these. There's higher liquidity in the monthly expirations. That's why I only swing trade those. Plus it gives me time. But I'm trying to think what else. There was something else I wanted to talk about. Hold on. Yeah, I guess we can talk about my day trading and swing trading strategy. Any questions that you guys got? Or is everybody good? Any beginner questions, I should say. We can also touch on risk management because risk management is going to be super important. Yeah, so risk management, right? A lot of people, when it comes to trading, especially if you're a beginner, a lot of people just want to come in and they want to make as much money as possible. We'll get to that later. It's just a weekly squeeze on the weekly time frame, weekly symmetrical triangle, waiting for the breakout. Let's see. Micro, that's pretty much it. Was the squeeze on the higher time frames because you'll get the cheaper contracts. And yeah, you want to catch the squeeze releasing. Hey, I like to hear it. Every third Friday for swing trades. Yes. Porsche, if you're selling the contracts, like if you're buying it, you can only lose what you put in. But if you're doing the opposite, because in every single scenario, there's a transaction from a buyer and a seller. So if we're buying Apple calls, let's just say we're looking at Apple, it does a basic ABCD formation. Somebody sold us these contracts because they thought Apple was going to continue going down. Say you bought it for $100. Us, the buyers, we can only ever lose 100. But the person who sold it to us, the most they can make is 100. They could lose infinite to the upside. So the person that sold us the contract here got screwed because guess what? Boom. Let's see. Yeah, if you're selling premiums, that's how you can lose more. I don't trade futures. Honestly, I'm not too familiar with futures, to be completely honest. I just chart them. Have no idea how to trade them. When it comes to stop losses, it really depends where you enter. So typically I tell myself I'm willing to lose 20% for every single day trade. Of course, I just deleted all my Apple levels. But with day trading, like I said, I tell myself I'm willing to lose 20%. So if we get in a contract for $242, 10% is $24, double that, $48. I should be willing to lose $48 for every single contract I buy. So I get into the trade with the intention, okay, if this thing goes against me by $48 and hits my stop loss, oh well, I already accepted the loss. That's how you're going to piece or that's how you're going to separate yourself from emotional trading if you're already accepting the loss before you get in. Swing trades, I tell myself 50%. So if I hit my stop loss at negative 50%, I should not be surprised. Unless, of course, I oversize and I didn't accept the risk. But yeah, that's how I typically tell myself my stop losses. Now, it also depends where you enter. Because we had this beautiful QQQ trade. I don't know if you guys remember this one. If you're in the Discord, you know it. Let me find it. That was the 5-minute one. This one. This QQQ trade that we took was based off of a 61.8% retracement. So if we're looking at QQQ, and again, I talk about this in my trading ebook. If you're just tuning in and you don't have the book, you know, make sure you cop it. But Fibonacci retracements, I've been using this a lot in my day trading strategy recently. So we take the low point to the high point and we get this 61.8% retracement right here. Why bigger risk on the swing? Because you gotta let it breathe. If you're going in a swing with a 10% stop loss, you're gonna hit your stop loss probably 90% of the time. Thank you for the subscribe. I greatly appreciate it. Running up to 25K. We're almost there. Anyway, so with this day trade on QQQ, we got the low point, high point, 61.8% retracement is a very common retracement. So QQQ, it came down, hit it once, twice, 3, 4, 5, 6, 7. We entered on the 7th candle. I was watching the level 2, the buyers were coming in, they bought it every single time that QQQ was hitting this price. So I was like, all right, we are going to get into this trade, and where is our stop loss? Right below this, because this offered us the best possible risk to reward possible. So that's why I say it depends where you enter, where you end up entering the trade. Because here, you know, we're talking 5%, if that, for a stop loss. And these contracts, I mean, they went stupid. It was a 0 day till expiration, or 0 DTE. So from 282.53 all the way up to 284.50 in 2 minutes, you know, you're talking a significant return. Now, if you're day trading, and let's just say you enter off of VWAP, or maybe the 21 EMA, we can see that we have a lot of support right here. Well, if you snag it off the 21, stop loss right under the 21. So trading, really what it comes down to is understanding your risk, because I could get in, like, we never know exactly how much money we are going to make in a trade, but what we do know is how much money we are going to lose if it goes against us. So really trading comes down to controlling your risk to the downside. Let's see. No, the QQQ one we did, it was a butterfly, expired yesterday. Butterflies are always same week as well. But yeah, trading, what it comes down to is controlling your downside risk while maximizing your upside potential. It's really what it comes down to. What's up, Corey, my man? How you been? But yeah, hopefully that answered your question. Who asked that? Where'd you go? No, the bread and butter. I'm not even gonna talk about that. No. I'll pass. Let's see. VC, it really depends on the time frame that you find the setup, really. So I prefer to watch the 5-minute and 10-minute, and then use the 1-minute and 3-minute to really find my entries. But if you like trading off a 15-minute and a 30-minute, that's really up to you. But as far as my day trading strategy, it's changed a little bit since I wrote the book. But if we're looking at what I have set up here, I have the 8 EMA. Thank you for the subscribe. I greatly appreciate it. Yes, I'm using ThinkorSwim. I have the 8 EMA, 21 EMA, 50 SMA, 200 SMA, my Ttm Squeeze Pro, early in and out. I don't know if I said VWAP. My early in and out, Ttm Squeeze Pro, ready, aim, fire. So that is my exact setup. Basically, what I like to look for is kind of like some confluence right here. So I like to see them all very, very tight, because what does that tell us? There is a lot of support right here. Meaning, again, if we're looking for possible risk to reward, or best possible risk to reward, it's going to be here. The Costco day trade that we took yesterday, why did I take it? Well, if we go to the 5-minute time frame, we can see Costco had a nice move to the upside. This is just a basic ABCD formation, and it's kind of sitting at that 50% retracement. Again, I talk about the ABCD in the book, but we have that ABCD bull flag and the 50% retracement. And what is Costco doing? It's just kind of sitting here, sitting at this level. So if it wasn't a 0 DTE where the Theta would completely screw my contracts if we were just holding this entire time, the best possible risk reward would be here. But yesterday we did wait for that breakout, and then we caught that beautiful move to the upside. Hold on. But yeah. So I have a video on how to set up ThinkorSwim. And I have like 3 of them. So that's really what my day trading strategy comes down to. And really the way that I determine direction is very, very simple. What I do, I set up a, hold on, let me fix this. If you guys don't know, I go live every single morning at 8:15 a.m. Eastern time here on this YouTube, and give you guys a completely free watch list for the day. So yesterday I gave you guys Tesla, and Tesla absolutely printed. Gave you Tesla 2 days in a row. But really what I'm looking for on, God, that was such a beautiful move yesterday. I cannot believe I missed that. Yesterday I had some personal stuff I had to deal with, so I missed Tesla in the morning, and then going back to the 61.8% retracement, guess what I missed yesterday? These contracts went from like $350 to like $2,000 by the end of the day. You're talking about some FOMO. That's FOMO right there. But if we're looking at Tesla again, what did it do? Shot up in price, came back, made the 61.8% retracement. 1, 2, 3, 4, 5, 6, ripped all the way up to 769.94 from 730. Yikes. But the way that I determine direction for my day trades, it's very, very simple. I look at the 1 hour, I look at the 4 hour, and I look at the daily. I also look at the 30-minute because I like to look for squeezes. The Ttm Squeeze plays a huge role in my overall strategy. Again, I talk about how to use the squeeze on my channel, talk about it in the book. But yeah, so if we're looking at Tesla, the day that I actually traded it, Thursday, what I have set up is the 5, 8, 21, 34, 55, and 89 EMA. If the 5 is on top of the 8, 8 on top of 21, 21 on top of the 34, 34 on top of 55, 55 on top of 89, I like to look for that on the 1 hour, 4 hour, and ideally the daily, depending on, you know, what's going on. But we have that stack on the 1 hour and we have it on the 4 hour. That is bullish. And then vice versa to the downside. If they're all below each other, that's bearish, as we can see. So I was flipping through in the morning. I noticed, okay, we're stacked on the 1 hour, we're stacked on the 4 hour, and we also have this beautiful squeeze. So with the squeeze, if the stock price holds above the moving averages, more than likely the squeeze is going to fire up. However, if the stock holds below the moving averages, more than likely the squeeze is going to fire down. So going into market open Thursday, I noticed this. It was holding above the moving averages. We were squeezing with the light blue momentum, which represents very strong buying momentum. And then when it comes to day trades, typically what I look for is going to be a break above pre-market highs or the previous day's highs. So if we're looking at this Tesla example, while the pre-market high was the previous day's high. So if this thing does break, that's going to be an even bigger reaction. Tesla exploded that day. Beautiful move. That's really what I do with my day trading strategy. I have this list right here. This is what I day trade. So it lets me know if there's squeezes. So the red represents a squeeze. So if I'm looking at this, I'm like, all right, Meta, which is banned for the time being, is in a 30-minute squeeze and a 1 hour squeeze. The squeeze is my highest probability trade. Kid you not, if you're in the Discord, you know every single time there's a squeeze, if it's on a 5-minute, 10-minute, 1 hour, 4 hour daily, whatever it is, I let you guys know. There's a reason behind that. I'm not just saying that because now I'm affiliated with the Ttm Squeeze. I was saying it before I was even affiliated with them. I've been using the Squeeze for years. I didn't even get affiliated with them till it's probably almost been, actually no, it was like the beginning of the year. So the Squeeze, in my opinion, it's a custom scanner. The Squeeze, in my opinion, if you can piece that together with your moving averages, understanding the momentum and the actual dots, very, very high probability. No, Mark, it's a custom one that I did. Let's see. If you would have traded Tesla, was it a day trade or a scalp? Just a normal day trade. Really, scalping comes down to looking for like 30-cent moves. I'm not looking for 30-cent moves. I'm looking for bigger reactions. So yeah, I could be in and out, you know, within 2 minutes, but I'm looking for a big move. Let's see. Just trade lighter size, or just don't trade 0 DTE. Hey, my G Fuel shipped. Awesome. Now with my swing trading strategy, I now add in different indicators. As you guys can see, everything's a little different. Swing trading, I like to use the 8 EMA, 21 EMA, and 34 EMA. Again, Fibonacci. But now I add in this on balance volume indicator, the stochastic slow, and still Ttm Squeeze. Because if we're looking at Tesla, Tesla's holding the moving averages, yellow momentum, orange and red dots. What is more than likely going to happen? Squeeze is going to fire up. And then, boom, there goes Tesla. And then, of course, you can use Fibonacci to find your price targets. Boom, boom. 127, 1618. There you go. Those are your price targets. But yeah, so different strategies for swing trading, day trading. Again, I explained them in my book. But really the rest of trading, thank you for the subscribe. I greatly appreciate it. Really the rest of trading comes down to, I'm going to spend like the last 15 minutes really talking about psychology because a lot of traders completely ignore this and that's why they lose their ass. But there's a reason why 99% of traders fail, or not 99%, my bad. 95% of traders fail. It's because 95% of traders are doing the same exact thing. You don't need to take 3, 4, 5, 6, 7 trades a day on, what day was FOMC? Wednesday? I took the most trades I've ever taken in a day on Wednesday. I don't like trading a lot. I like to take 1 to 3 trades a day. That's all you need. If you have a really good trade, your very, very first trade of the day, just take the day off. And let me pull up Microsoft Paint. So a common thing that I see people doing is they'll take, you know, a winning trade. Let's say they have a really good first trade. One. You have a good one right here. Then you get into the second trade and you lose all of your money from your first trade plus more, and now you're red. That is a very common theme that I see from newer traders because what they're doing, are you kidding me? We're just gonna exit out of this and open up another one. The thing is with newer traders, they're trying to make as much money as they possibly can. And that's not how you're going to be successful. There's going to be days where you lose $6. There's going to be days where you lose $600. There's going to be days where you make $8. There's going to be days where you make $1,000. Every single day is going to be different. Every single day is going to offer you different probabilities, not probabilities, different setups. So you could have high probability setups, multiple of them in a day. If that's the case, then I'm going to take full advantage of it, like on Wednesday. And then there's going to be days where, like yesterday, where first off, I missed the first 30 minutes of market open. And the only thing I liked other than Tesla was that Costco. Took Costco, I was done. That's all I had to take. So you got to treat every single day different. Yeah, everything. This is going to be right on the channel as soon as I'm done. But yeah, you got to treat every single day different, because if the reason I don't like daily goals is, let's just say I have a daily goal of making $1,000 a day and I hit 600 today. I'm going to sit here because it's so programmed in my head that I got to make $1,000 today. I'm going to sit here and I'm going to keep trading, hopefully to get to that 1,000. And what's going to happen if you're in that scenario? You're going to lose your $600 because you're trying to force trades that you shouldn't be taking to begin with. So really what it comes down to, yes, you do have to contact the people at Simpler Trading though to get it. And hold on, because now I am affiliated with the Ttm Squeeze. Make sure you use my affiliate link if you're actually going to go cop it. Again, you don't have to. I'm not telling you that you have to, but let's see. If you are interested in it, that's my link. But over your time trading, this is why it's so important to journal and yeah, just really journal all of your trades, because you're going to identify high probability setups. There's one. Hold on. Here's another one. Here's another one. Here's another one. We'll look at these 4. What do we notice with, I think 3 or actually 5? Most of these setups, first off, this is a symmetrical triangle on Amazon that we took and then eventually got stopped out on the rest. What do we notice? Squeeze. So the longer you're trading, the longer you're journaling, you're going to notice what is high probability for you. Everybody's is going to be different. Maybe you really love trading retracements and that's your A+ setup and that's your highest probability trade. Well, if you notice that, you better be taking those trades. So the trades I take, they're very specific. So like the Orb Strategy, my highest probability setup is when we get an orb and a squeeze. That is my highest probability setup. So when I see that, I am trading that. I make it known in the Discord too when these setups are happening, because just over time I've noticed those are my highest probability setups. But obviously, you know, I have other setups that I can take advantage of. Here's another one on Apple. Squeeze, or not, there wasn't a squeeze on this one, but we had the orb and then it broke and it absolutely ripped. We traded this on, what was it, Wednesday? I think it was, in the Discord. Got in once, took some profits, got stopped out, got right back in, caught this beautiful move to the upside. What happens when you can't identify? Yeah, I mean, if you can't identify, it's not guaranteed that you're going to make money. Like, yeah, this is my highest probability setup and everything looks good. I'm not guaranteed that I'm going to make money. Sometimes it's just uncertain circumstances that you lose money. So, you know, maybe it just didn't work out in your favor that time. If that's the case, you just move on. There's always another trade. But what I was trying to get to is you only want to take high probability setups. If I don't see something that is in my arsenal of setups, I'm not going to take it. So typically, if you find yourself, if you're somebody who is you know, taking 1 winning trade, 2 winning trades, 3 winning trades, and then on your final trade you lose it all plus more, it's because you're trying to make as much money as you possibly can. Typically my very first trade of the day, and I forgot to say this in the video, but typically my very first trade of the day, depending on how high probability the setup is, that's going to be my biggest trade of the day, the very first one. So then from there, what ends up happening, you just open up OBS Studio and record your screen. Super simple. But this is typically going to be my very first, or the first trade is typically my biggest. It has to be high probability. If it's not a high probability, I'm not going to trade it. Then if I see a second setup, I'm going to go into this trade only risking some profits from this trade. Built in, but not. Yeah, OBS Studio. is the way to go. But yeah, I'm only going to be risking some of my profits from here. So at the end of the day, I am still guaranteed to be green. If this is a winner, I take a third trade. Guess what? I'm only going to be risking some of my profit from here and here. So I am still guaranteed to end green for the day. From there, if I see a fourth trade, typically I try not to take more trades, because if we break it down to just probabilities of trading, you have a 50-50 chance of making money, right? So you can lose or you can win. 50-50 chance. Add in, your technical analysis and everything, you start skewing the risk to reward in your favor over here. But the more trades you take, you are bound to take a loser. That's just probabilities. That's the market. That's everything. If you flip a quarter, you can only hit heads or tails. You're not going to hit heads forever. Eventually, you're going to hit tails. Tail is going to be your loser. So the more trades you take, there is a higher probability that you are going to take a loser. So if I take a fourth trade, guess what? I'm only going to be risking a little bit of profits from here, here, and here. I scale out of my positions. Always scale out. You want to ride your winners as much as you possibly can. Also depends how heavy I am in the position. But yeah. Jamal, there's really no set time frames when I'm trading. I just get in, catch the momentum. If I like my profits, I'm dipping out. Moving my stop loss and trimming my position. But hold on. Why did I just get like a ton of followers on Instagram? Weird. Anyways, but yeah, so did I really just close that? Word bad. No. Paint. What it comes down to is it really looks like a pyramid. Boom, boom. That is an ugly pyramid. But down here is typically my first trade for the day. We get up here. This is my second trade. Notice how it gets smaller. Third trade, smaller. Fourth trade, smaller. And God forbid I take a fifth trade. That was awful. Good God. There we go. And then that's how I go about my position sizing. The level 2. As soon as the level 2 confirms my entry price, that's when I'm in. Let's see. I'm trying to think if there's anything else I want to talk about. I gotta get ready to hop off. Wanted to do this from 12 to 1. So let's take like 5-10 minutes, answer any questions that you guys got. Hopefully you guys found a lot of value in this. I kind of just took everything right out of my brain. I didn't have any presentation. Just spoke what I thought was necessary. But again, if you guys do want to learn more about my trading strategy, everything I know when it comes to trading, again, make sure you're copying that trading ebook right there. And then on top of that, again, type your questions in the chat. I'm gonna answer them. But on top of that, if you do want to learn from me, Grizzly, and Gino, GD, make sure to hop in our mentorship that we got coming up. It starts, I think we're gonna start at the end of the month. But if you guys do want to hop in that, here's the link right here. Boom, boom. David, I got tons of videos on level 2. Make sure you watch those. Well, let me go up. Do you recommend on demand to get better at trading? Actually, here, hold up. I got a better website for you than on demand. I mess around with this thing all the time. How do I find my favorites? Let's see. Here it is. So with this, it's a it's like an actual simulator. It's really, really cool. So what you can do is you can, there's a way to pick a day. Hold on. Where is it? Right here. So you could just go back to like February 8th. All right, I want to look at February 8th. All right, cool. Apple looks weak. If I'm going to be trading Apple, I'm going to be looking for a break below, let's just say here. You can put it on, you know, you can choose many different speeds, but you could do 10x, and then you just click, let me use this in a fat minute, but play. You can click play. So, all right, we're watching SPY, we're watching Apple, comes up. Maybe it's not going to break to the downside, but you know, say you want to watch it to the downside, maybe whatever it ends up being. Oh, SPY is selling off, let's just do a 5,000 share position and sell short. Oh, let's go short. Boom, let's see what we get. So this is going to be equity, it's not going to be options. Again, I have no idea what's going to happen here, but yeah, you just go short and you're like, all right, level 2 or the tape, I think, you know, it's going to come back up. Let me trim some of my position. Let me buy back 2,500. So yeah, let's let me drop that in the chat. Copy, paste. It's the guy that wrote the book How to Day Trade for a Living. So yeah, play around with that. On demand is stupid laggy, so I wouldn't even mess with that. Let's see. No, you should never be risking your entire account. Never, ever, ever. Never. Also, SPY is about to orb right here. If it were to orb to the upside, that'd be cool. But daily morning routine, typically what I do, I go to the gym in the morning, gym or jujitsu, come back, shower, eat, and then live stream at 8:15. Get everything set up. No, OBS is a completely different program. Get everything set up for the day, my plan, and then market opens, execute the plan, hopefully. And then typically around like 11 o'clock is when I'm done. And I just, you know, make YouTube videos, hang out with my fiance, and that's pretty much it. Really, my life isn't that exciting. People tell me to do daily vlogs all the time. Trust me, you would be put to sleep. And then I read a lot. When I'm not trading, I'm reading or making YouTube videos. Let's see. Hey Panda, my man, how you doing? Hope all is good, my man. I hope you're printing. No, on demand is like super laggy. I've tried it. It's just you can't really get anything done with it. What other questions we got? You can also use TradingView. TradingView has a back tester. I go in there all the time for Forex and back test swing strategies because I don't day trade Forex, I only swing it. I'm good, I can't complain. How are you? Yep, exactly, David. Yeah, that simulator's free. Of course, Jamal, the longer you look at the charts, the better you're gonna get. If you want to make money, you gotta look at charts. If you only want to spend 5 minutes a day, 10 minutes a day looking at a chart, that's not how you're gonna make money. You gotta be dedicated to this stuff. Like, I genuinely enjoy sitting here looking at charts. See, the thing is, people on TikTok and Instagram, first off, they're ignorant as hell. But they're just like, bro, you got too many indicators. Focus on price action only. I don't have that many indicators. They're all different indicators. First off, I don't even look at volume. Really, I don't. It's just 3 moving averages the on balance volume, which is much better than volume itself, a buy and sell indicator, and then my squeeze. Super simple setup. I could explain it to like a 4-year-old. That's how super simple it is. Yes, moving averages. I have 3 of them. On this screen, I have 3 of them. I put it in the chat, the simulator. It's scroll up a little bit. It's just called stocktradingsimulator.com. Let's see. George, if you can trade equity, you can trade options. It's really what it comes down to. No. He's saying it a different way, Stefan. Because yes, that's true. When I'm going through and I'm doing my analysis for the week, it takes me probably 10 seconds to identify if I want to watch the stock for the week or not. If it takes me more than 10 seconds to look at the chart and say, do I really want to watch this thing? And if you guys join the live streams in the morning, you know I flip through that watch list so quick because I know what to look for. Probably takes anywhere 10 to 20 seconds. If I don't like it, I move on. If I like it, it gets onto the list, and then I'll break it down. I'll do my analysis. I'm like, all right, I really like this setup, and then I'll focus on it. But yeah, you gotta sit here and you gotta look at the charts to understand, like, one, how does price move and all that other stuff. But yeah, I see what you're saying. I have 8, 21, and 34 on this chart. 8, 21, 34, yes. Yeah, no, John Carter's a GOAT. He is somebody that I will always look up to. And hopefully I can get him on an Instagram live one day. That's my goal. But again, I talk anything about my strategy. I talk about it all in this trading ebook right here. So if you guys want to, cop it, read it. There's that. But yeah, that's pretty much what I got for the day. Nah, never use the 9. That's Grizzly. Also, Pudgy, good stuff. Yeah, Bookmap. I gotta get a 4th. I have a 4th monitor. I just haven't hung it up yet. But yeah, ThinkorSwim added Bookmap, or like a beta Bookmap, and I have to contact them and get it. But that's definitely something I want to look into. John Carter, he is a different breed of trader. It is crazy. But yeah, that's it. Fiance's got to dip out in a little bit, so thank you guys for joining today. If you guys ever want, this is going to be on my channel, so you can just feel free to go watch it whenever you want. But yeah, if you're not already, make sure you guys are subscribed. I go live every single morning, 8:15 a.m. Eastern time on YouTube. Give you guys a completely free watch list for the day and upload tons of educational content here on this channel. So if you guys aren't subscribed, you're missing out. Other than that, everybody enjoy the rest of your weekend.